Hi, this is Tom Alexander. I want to give you a brief trade lesson on how to use the market profile graph. What we're going to take a look at here will display a number of really important concepts about market profile. It is extraordinarily robust. It is fractal across time frames. It can be used for very effective analysis. That analysis can lead to making actionable trade decisions. Now, the important thing about the market profile graph is to understand that it is exactly that. It is a graph. It is a tool. The power in the market profile graph comes from an understanding of how auction markets work. The profile graph displays auction market activity in a very unique way that highlights what market participants think is value, and as a corollary, where value is not. If we know these things, we can find an edge. Now, auction market principles describe the behavior of the hows and whys of market development. These principles can provide a very solid, objective, consistent foundation for making trade decisions. Auction market principles apply to all markets and in all time frames, which makes it uniquely robust and adaptable regardless of the instrument you trade or the time frame in which you trade. Now, when you buy something, what condition has to exist if you're going to be able to sell it higher? Well, it has to be below value. When you sell something, what condition has to exist if you're going to buy it back lower? Well, obviously, if you're going to buy it back lower and you sell it higher, it has to be trading above value. How you define value is critically important. The definition of value between a fundamental trader, a technical trader, and an auction market trader is vastly different. I posit that the only objective and consistent way to determine value is through the auction market lens. It does not change. It always depends on the definition of value derived from the activity of the actual market participants in real time. It is a present tense definition of value. So value is determined by the market participants. The more market participants trade in a given price area, the greater the value is perceived by the majority of traders in that auction. The less they trade in a given price area, the less value is perceived by those traders that are in the market at that point in time. Now, an auction is a very consistent development process that basically takes three different steps. We begin with a mature auction. When an auction market is mature, we have a step one, which is in typical trader parlance, a trend. So the market always trends out of mature auctions. This is true in any time frame. Then there's a step two. The market will stop. The market will become two-sided. This step one is a one-sided market. Then step two, you get some pushback from the dominant force in the market. In this case, the dominant force was buyers. Well, enough sellers come in here to meet the buyers, and the market becomes two-sided. Step three is development of a range. It's what's known most commonly as a consolidation. And then you get another mature auction, and step one begins again. So you have a mature auction, a step one, a step two, a mature auction, another mature auction develops, which is a step three, then step one begins again. Now, I'm showing step one continuing higher here. You don't know if it's going to be higher or lower. You just know that there's going to be a sharp break. Just that information alone, knowing when to trade and why, can give you an inherent edge in your trading. Now, let's take a look at an actual example of this process that's in effect as this is being recorded. This is the spider. This is the S&P 500 ETF spider. What you're looking at here is a daily configuration of the profile chart. Each one of these letters is a day. This is the trading of January. This is the trading of February. And this is the trading so far in March of 2015. Now I'm going to unsplit this. Now the auction process is fractal. So when we look at this, what we're trying to determine is, what is this auction doing? Well, in general, there are a couple of observations I can make. The auction is certainly, value is moving higher in this auction. And value is determined by the market participants, and it's where most market participants, where the most activity is among market participants. This is what the market profile, one thing the market profile graph displays in a unique way that you can't necessarily see on a bar chart or a candlestick chart or the type of charts. Trade activity on the horizontal scale, that gives us our definition of value. So in this particular instance, we have a volume node here, high volume node here, a high volume node here, a high volume node here, here, and here. Now, if we notice, you've got the general migration of value is higher in this contract on an intermediate and long-term basis. Now, it's also clear we can take this data, this information here, and we can combine it into one auction. So I right click, I merge this left, a right click again, merge this left, and now we have a large auction comprised of all the trading from the beginning of 2015 to the end of February. Now we have March trading beginning in here. And we can see now there was an attempt to trade lower that failed, and the market traded sharply higher. Now the critical level from an auction market perspective for the integrity of a bullish assumption is the high volume node right here. This is the drop dead area for an immediate bullish assumption on the intermediate to long-term time frame. Now, you may be sitting there thinking, well, what does this have to do with a trade decision today? Well, your trade decisions, regardless of the time frame you trade, even if you're an intraday trader, need to begin with the larger context. I'm giving you that larger context now. Let's go down in time frame. We'll go to a 30-minute time frame. Now we have the last several days of trading. This is where the market is trading right now. As a matter of fact, I'm going to go in and I'm going to change the cursor so that it's clear. I'm going to make it red so we can see it. Now, this is where the market is trading as this is being recorded. Now, if we look at the last several days, I see overlapping range. I see high volume nodes, up, down, up. So this is a consolidation. This is what I want to see. This is all effectively one auction. Remember, the auction process is fractal. So each individual day is an auction, but each individual day combines into a larger degree auction. When we can identify what a larger degree auction is doing, we may be able to find trade opportunity. So I'm going to take this, I'm going to merge it. Now I have a very mature auction. Remember, This is what we're looking for. We want to find a mature auction. Why? Because when we can identify an auction that is mature, it increases the probabilities beyond randomness that we're about to get a sharp trading move, whether it's long or it's short. At that point in time, the general guideline is I want to be trading on the price side of the high volume node. In other words, if I'm in the time frame in which I'm trading, if price is below the high volume node, I want to be favoring shorts. If it's above the high volume node, I want to be favoring longs. And when I do that, it gives me an edge because I'm always identifying the trend and trading with the primary degree trend. And you can see today's trade activity, if I split this out, there was an opportunity in this market early in the cash session to sell against this high volume node. This could have been a very nice intraday trade. Now, from a longer term perspective, this area is now very important because if you recall back to our longer term charts, the definitive trend of this market is higher. The initial signal that there is a trend change of intermediate degree is when the high volume nodes begin to migrate lower. High volume nodes equal value. When value begins to migrate lower, that indicates a change in trend down. When value begins to migrate higher, coming off of a intermediate term low, that's a signal for a trend change higher. Now, if I'm a swing trader or a position trader, this is an area that I really want to see exceeded again, and if I'm a seller, this is the area against which I'm trading for short trades. As long as price is below this area, I want to be favoring the short side of the market. It's the path of least resistance. So I hope this gives you an idea. This is just one idea, one very simple but very powerful concept in how to use and how to configure the market profile graph to determine a trading edge. We happen to be using the S&P, the ETF S&P 500 Spider. This would apply to any stock, any future, any FX cross that you trade. That's one of the incredibly unique features about the profile graph. It is genuinely robust. Now, if you would like additional information, please visit us at www.alexandertrading.com. We trade strictly on market profile, how to use it, and we teach auction market trading and training. We have free courses, blogs, additional information. Please check us out. Thank you very much for your time.